Welcome everyone to the Kendall Report. It is Thursday night. What a day again, huh? 2 RXTs in a row. Don't get those often. And so much for an RTX sell signal and sideways for 1 to 2 days. It's interesting that the markets just kind of took off. It's very typical that I would be in the position I am, not being able to be in front of my screens, working on the studio. It was a very distracted day. Every once in a while I look back and we continue to see the markets moving much higher in the pattern. So anyway, I haven't been on Twitter much because of this major project, and tomorrow's even a bigger day than today, but we're right on schedule to complete everything. There is a shipment that's coming in tomorrow. If that gets messed up, then that will derail a good part of what I'm trying to get done this week. So lots of things going on here, folks. So let's talk a little bit about what's really going on. This is a mega cap rally. I mean, we're looking right now, NASDAQ up 1.51, up 21.2% this year. And oh yeah, remember that recession everybody keeps talking about? Doesn't seem to be there. S&P plus 0.94 on the session, up 9.3 on the year. The Russell is finally poking above water here, up 1.3 on the year, up 0.58 on the session. So didn't really get a big follow-through explosion on the bank stocks, although KRE was up 0.6 and QABA, which is the Community Bank Index, that was up 0.31. So still positive, but nothing like what we saw yesterday. 6+% on both of those indicators. So very, very interesting day. We saw claims come in today at 242. That was better than expected. We saw the continuing claims under 1.8 at 1.99, barely, but that's better than expected. And then, the Philly Fed came in at minus 10.4, but it was expected to come in between minus 14, 15, so that's better than expected. And and then I guess the funniest thing of the day, or what's going on in the background in this market, is this debt ceiling negotiation. And I love the headline that was played out: McCarthy sees a path. I mean, what does that mean exactly? Listen, they're just playing us, folks. Let's face it. This is they're just playing this thing like they always do. And in the end, the result is what I've been saying. You get a deal, we go forward. Fundamentally, it really doesn't change much of anything, in my opinion, but we are able to continue forward as we're looking, as we have been. So pretty exciting, though. We got above 42 handle. We're looking at right now the futures at 42.17, up 5 handles on the session. The SPX actually closed at 41.98. It was almost ready to trade above 4,200. And so we're seeing just a continuation. And one of the things I talked about last night, I was looking for maybe to trade into the pattern after the RTX sell signal. But once we went through the R2 number, it was just vertical. I looked at the intraday charts to see how they were set up, and we just continued on, traded all the way up. In fact, we were just short of RTX, I think, but right now we're traded up as high early when the markets reopened this afternoon. We did trade all the way up to 42.25. It looks like was the high. And if you recall, last night the fib target 1 was 42.22. So we've already hit fib target 1. And so I'll go through all that in the technicals here in just a few minutes. I don't expect this to be a long podcast tonight. We should be able to get through everything fairly quick. I'll set up Friday for you. Before I go much further, I'm just looking at my notes here, and it's pretty much exhausted everything that I could talk about. As far as tomorrow, there's no news coming out. There's nothing. So we're operating on sentiment, whatever that is, and whether to see whether or not we can actually push this thing or follow through tomorrow. And that'll be at least what I'll talk about in the technicals here in just a minute. Just want to tell you that I have no I have no idea what the studio is going to look like. I've got some configurations, but if you were to be able to see behind me, I'm a little more zoomed in right now because there is craziness just all around me here, and so I don't know what the studio is going to look like. I don't know what kind of things are going to go on this weekend, but here's what I'll tell you: there for sure will be some sort of broadcast on Sunday. I'm hoping as usual, but if it doesn't, I'll probably do something that's produced and it'll be much shorter, and I'll do a premiere, and so we'll feature a premiere and all that stuff. But I'm not sure what's going to happen here, folks. I can't at the moment, sitting where I'm sitting, looking at the background of where I'm looking at. We'll see how this thing comes together. I've got basically 2.5 days to finish this job, and there's part of the job hasn't even been started. It won't start till Saturday morning. So having said that, just know there might be some modification as we come into Sunday night anyway. So I'll try to get out on Twitter and give you a heads up, all that kind of stuff. I'm going to be pretty much absent again tomorrow as far as being around Twitter. I was kind of frustrated. So onward we go here. Let's go ahead. I really don't have any other comments on any of the macro stuff that's going on right now, other than I've been saying there's no recession coming, and markets are going to continue to climb this wall, and the intermediate trends, as you'll see, are the dominant trends. I discussed that last night. So let's go ahead and get into the database. So we had somewhat interesting 1,774 buy signals, 817 sells, so 2-to-1 ratio plus, and we went from 48.20 something last night to 50.74 bullish. So we're back above 50% level. I thought maybe we'd see a little more attrition, but we didn't, and we're continuing to see just crazy volatility, I think, in these numbers on the daily models. So they're really flopping around a lot. So just a quick discussion here. As we come into the Friday, we'll run the intermediate models. My expectation is at 4,200 that we probably stabilize, maybe even see some positive rotation. We're currently, let me just bring that up real quick here. And we're currently at, on a percent basis, 61.08. We've been up around 64, 65. So I think we just continue to stay at this level. And I've talked so much, and I spend so much time on this, on the database, because it's so important to understand. If it wasn't for this database, I would have been like every other person out there talking about negative, that the market was going to collapse, that we've seen a bunch of people even hanging around the channel here telling us how the market's going to go down. And maybe it's just so negative. I said this probably a month and a half ago. It's so negative that it's bullish. And that continues to be the case. And it's very interesting what's going on here, because the metrics out in the economy are continuing. Like I said, we look at the claims, the continuing claims. The nice thing about those numbers is we get updated every week. So the rear view mirror, where we're looking at, is not far behind us. So we continue to see the employment situation. Everything just continues to evolve in a very positive type configuration. So it's hard to be negative here on the economy on a macro level. There's just a lot more good than there is bad. And there are certainly some cold spots in the economy and some things out there, but on a larger scheme of things, they're not there. And I've talked a little bit about this, I'll just cover it here right now, is that there is on a larger scale on an international level, there's rotation. There's a lot of areas that are doing better on an international scene than there has been for a while as well. And I know a lot of folks, I haven't looked at the emerging markets. Maybe we should take a quick glance at those tonight as we finish the week, because my buddy Hugh Hendry is going nuts about everything, and he's just super negative and super wrong. And I hate to call him out on this stuff, but he closes head. I always tell you that if a hedge fund guy closes his fund, they only close it for one reason, because they lost and they couldn't sustain. So if that's the case, then you know that the fund is closed because they didn't do well. And so, I would just tell you that somebody also, just real quick here, just bringing up a little mini rant here, but somebody put on Twitter a story that was on Zero Hedge. I always tell you, if you want to find out what's not going to happen, go to Zero Hedge. But Zero Hedge, of all people, it's, what is it? They call it the pot calling the kettle black, the kettle calling the pot black. Well, there was an article that somebody posted on Twitter, on my Twitter account today. I managed to run across, and it was talking about how financial headlines are mostly wrong. And I've told you before, it's really simple to be fairly good as you just watch, not just Kramer, but just about everything. Every one of these analysts that have been coming up, 4 months, what is it? This is, we're halfway through May, and they've been telling us since January, the recession's coming, the market's going to roll over. They specifically told you that the FANGs and the big mega caps were going to be the drawdown. They were going to be the bad guys, and they were going to lay off all these people, and everything has been bullish. Like I said, the NAS is up 21.2% on the year. So let's go ahead and get through the technicals. We should be able to get through here pretty quick. Just a couple side comments as I'm going through the database, but look for positive rotation on the intermediate database. Like I said, it's right now at 61.08 bullish. I'm just looking for that to continue to improve. And what's nice about that, as long as we stay under 68 to 72%, we're not getting overdone. And that I've shown you that forward-looking map a number of times. I'll wait till hopefully Sunday night we'll be sitting here. I have no idea what configuration I'll be in, but hopefully we'll be sitting here and looking at these charts together on Sunday night. Let's go ahead and get into the technicals. All right, so here's the hourly S&P. Sort of interesting. We still have this upward slope, and this was dominant throughout the session today. The algos were very bullish. If you look over here, this is at 1 o'clock today. We were getting a signal for an acceleration on the market, and that's where this rally came out of as we came into, the last couple hours of the day. So you can see that we just rocketed up. We actually have what a dragon head formation right now, which suggests we still have some potential higher prices. You can see the algos are indicating some higher prices into about an hour to 2 hours before London tonight, and then possibly starting to roll back underneath this 10-period moving average. On the hourly chart, there's some fib targets here. Right now they are 4207, 4200, 4196 down here. So we're looking at coming back in, at least getting a little bit under the 4200 level. But the upward slope here on this 21 is going to be really solid. So for intraday support, make sure you pay attention to simple 21. Make sure we're staying in a positive zone on the PPM2 on that, and you should be able to guide yourself along there. Should be probably some bounces here. And the key tomorrow will be, if we can close above this 4,200, that we'll just call it a milestone that we have not been able to do for a while. So let's go ahead and go over to the daily chart here. And you'll see here in a daily chart, yesterday RTX, we traded up to it, but we did not close above it. So we did not get a RTX sell for today. We basically are still looking at the market grid expanding on the upside. So if we take a look here, I think I can make this just a bit bigger. It's not gonna work here. So let me just try something real quick. All right, so I made this a little bigger. You'll see over in the far right, the numbers are a little easier to see now. And I'll move it up. Somebody gave me a heads up that there's a logo that comes up on YouTube of the Kendall report, and it comes right over where the numbers are. So you should be okay tonight. But we look here at number. Let's review yesterday. So I was looking at the potential of a 51 S2, S1, S2, and I told you we might do an R2, S2. Well, we went all the way, as you can see here, we went all the way to 42.12, and the high yesterday was 42.15. So we did get just above RTX, and we closed right on RTX at 12. So we closed on it. And now today, we look at the numbers for today here. We're going to look at S1 is at 4,200. I was just talking on the hourly chart where it looks like we could get to that level right there. That's the minimum. 41.88 is S2. That might be a little deep, but it's very possible if we get any kind of rejection. And if you folks were watching here earlier intraday, I did see we traded up to 41.99 early, got a huge rejection off that 42, traded all the way down intraday, and then it bounced and just went into when the algos were turning up. And for that last about 2.5, but the last 3 hours, the hourly algo turned up, and it was just vertical from there right into the close. So there was a really good bid as we came into the close as well. But this is a dynamic on this chart here that I'll talk a little bit about. Is we're still keeping PPM1 is at that minimum level. It's 0.15 is an upward trend here. And what we're looking at is 0.16, PPM2 is 0.07. So it doesn't have, like I've been trying to explain, there is not a big parabolic curve, but we have this angle of attack. There is a bias to the upside. This will continue. And it's the big dominant chart that we have here is if I flip this over to a weekly, this is where you really see that upward slope. I talked about that yesterday. And it was interesting. I did talk about the market grid on the weekly. If you look over here, 42.22 was R3. I mentioned that. That seemed kind of far-fetched when we were doing the video last night. And so there's also some weekly Fibonacci targets here, 42.59 and then 4,400. I've been talking about these. These came out back on April 10th. You'll see these dots up here that the fib, we're almost up to fib target 1, which is 42.59. We'll round it to 42.60. But you can see this angle of attack here on the weekly just looks like we're going to continue to move along that line. I want you to notice that the 10-period moving average here is 41.23. If we look at the low of the week, the low was 41.20. So we went 3 handles below it, got a huge bounce off of that support. And then we're looking at PPM1, 0.78. Anything over 0.25 is trend. PPM2 is 0.41. PPM3 is still negative. But this is what I was talking to you about the other day, is it's starting to turn up. So we're finally maybe getting into the mode where we're going to see this fib target 2 challenge be 4,400, 4,600. It looks like things could get pretty good. And I would only say to the sell in May and go away guys, this may not be what is looking very good for that. And one of the things that also I want to point out is that I think we've got a summertime rally coming here. and I've been mentioning this off and on as we go through things here, but this looks like we still have this positive slope. It's going to, looking at the weekly chart, we're looking well into Q3. And so, the expectations have been for me, if you go back and fact check me and watch some videos going back a couple months ago, I said when the database got into the 60% plus, when we got on the intermediate 42, and then when we got into the 60 percentile range, that was telling me that the forward looking was still about, if you recall, 120 days looking forward. And this is what the algos are telling us. We're in this upward slope here, and we're starting to see the PPM3 in the next, looks like probably week, maybe 2 weeks, is going to cut through its first and second derivative, which is going to confirm an ongoing rally in this market, not a top of any sort. So we're still just climbing this wall of worry. It's going to be interesting to see if we get any types of trade signals and stuff that come out in the next couple of days on the shorter term stuff. That'll be interesting. But like I said, we're still 61% bullish on the intermediate, and that forward-looking scenario is still very strong. So just continue to expect to see us go through this rally. So hopefully what we'll see here on Sunday night when I come up, we'll be able to target some of these things a little better. We're basically mid-month here on May, so just expect to see this thing continue to climb this range. I've been saying, one of the things I said, there was some short-term weakness that was coming into play, but the intermediate is where all of the support is coming. That the intermediate trend is what I call dominant right now. You look at the dailies, we were just looking at them last night, all of the moving averages were flat. It was like trendless, right? So there's nothing to figure out there. That's why we went to the weekly and said the weekly trend is still up, and we basically bounced off the 10-week moving average. And let me just look at something real quick here, just from standpoint. Yeah, so we had a low here of 41.20, and on the market grid for the week, we never 41.12 was the S1. So basically an S1 right now, R3. A lot of times we'll get S1, R2 is a typical range to be expected in these patterns, but we've extended this to R3. I don't know, can we print a 48 today? 42.48 would be printing all the way up to RXT on the weekly basis. So these are big numbers. All right, so we'll go to NASDAQ next. We had a Fibonacci target. We'll start with weekly and we'll go down, but the weekly right now, the Fib targets on the upside, 14,005. I mentioned these, I know, in the last couple of days, 14,844, 15,563, but this angle of attack here, we have PPM1 at a plus 1.51, PPM2 here in the red at 1.09, and PPM3 at 0.07. So it's the same type of configuration that's on the S&P, where all of the moving averages are now turning up. And those of you who've been around the channel, this is right here is the classic trend mode that we're at. And this is on a weekly basis. So we're going to continue to climb up here. And the Fib target 1 was 14,005. And we printed here right now at 13,960. Yeah, 13,960. So we're right just below that Fib target, and you can see these next targets and these angle of attacks. One of the things that is likely to occur here is an acceleration up into the 15 handle. So if you want to take on the opinion that, this thing's getting way overdone and all that, up 21%, I don't think you've seen anything yet. We could see, another 10, 12% plus here on this index. I mean, it's May, folks. There's a lot to go on, and maybe there's some derailment. It's not going to be the debt ceiling, okay? That's not going to be it. That's a non-event anyway. But I think we're just going to continue to see us climb this rally. It doesn't mean we can't have some declines back to this demand line. The simple SMA 10 is all you need. That if you look at the value, so this week SMA 10 is 13,225. The low is 13,350. So it came close to it where the S&P was pretty much right on it. But this is the acceleration. And right now, 13,794 is RXT on a weekly on the NASDAQ. And so we potentially, if we go out, mark that number down, if we go out above that number, then we'd have an RTX and maybe flatten out for a week or so. And, it's going to be, I'm not sure when the next Fed meeting, I believe there's one in the second week of June. And I'm still expecting, by the way, and I've said this, we'll cover this in the interest rates here in a minute, but I'm still expecting another quarter point plus rise in yields here yet on the Fed funds. Let's go ahead and take a look at the daily chart here. And daily has that very similar angle of attack. Let me just zoom in on this so you can see this angle here. And what you're seeing is this steep angle. We did get the RTX sell signal on yesterday's activity. We had a high of close at 13,894, 13,794 was RXT. So you'll see that on the scale on the far right here. So that's just continuing to climb this really steep line. Look at PPM1, 0.45, anything over 0.25 is trend mode, 0.30 on PPM2, 0.16 on PPM3s. And you can see we're not really accelerating from here, but we're expected to maintain this momentum, which will confirm this upward trend, everything I just talked about on the weekly basis. All right, next we'll go through the Russell. Russell's continuing to move up toward that 200-day. Remember the fib targets in here, 1813, 1843, 1862. Yesterday's high, I guess we could go to tonight's high, 1798. So we're getting close to that fib target 1, which is 1813. We look at the market grid for today, easily 1807 is R2, R3, 1816. So it's going to be critical on all of these patterns here from a market grid standpoint is watch the S2 is going to be the critical pivot point on the S&P, on the NASDAQ, and on the Russell. So is there going to be some sort of selling, weekend selling, or end of week selling? It's possible, but it looks like everything's still positive, and there's the upward bias should be dominant as we go through, including coming into today. Still looking at the banks to rally. I actually worked on the bank ETF hack last night. It's not quite done. Hopefully I'll get a little more time in tonight. My home office is much more let's just call it less chaotic than where I'm sitting right now. So I'll try to get into that hopefully tonight. But the banks are the recovery of the banks and the realization that there's not a banking crisis, as that starts to evolve, will at least help the financial sector. Listen, financial sector is in disarray, and there's lots of issues there. So I'm not saying there's not issues. I'm saying we're not in 2008. We're not going to see massive bank failures and all of that stuff. Call it Jim Baker. Dr. Baker and I were been screaming this going back months ago when all this stuff, when the whole thing started, with SVB and, the whole thing. So, I mean, it is not, it's been a crisis for a few banks for sure. And there's been other people under pressure and assets moved around, and now all that's stabilized. But this index is going to be the biggest beneficiary of a recovery in the financial sector. There are a lot of these smaller stocks in this sector. So just know that is definitely going to help to push this market higher. All right, next we'll look at the 10-year, and I've been telling you for days and days that we're going to continue to climb up. We almost got to fib target 2 on the 10-year, which is 367. We printed 365 yesterday. I think we'll see that we got right up to 364, we call it 365 as RXT here on the daily charts. And we got up yesterday at 365, so we hit RXT. And as we come into tomorrow, we should see this upward slope or this channel continue. I'm going to blow this up just so you can see it. Look at the angle of attack of this 10-period moving average. That is telling you everything. And it's actually up 0.85. Remember, trend mode is 0.25 or greater. PPM2, 0.06, which is kind of flat. It's just starting to turn up. I still expect to see this markets top out somewhere in here, which is evident. I'll just bring up the weekly chart here just to bring that perspective in, as this is where the weekly should start to top out right in this 21-week moving average. You'll see 361. That is the top end of this. The one thing that's interesting here is that the there's a target for 399 on the 10-year. These fib targets is still live, and we're seeing acceleration on this stuff. I just want to bring out something on this thing. I'm managed to see over the last several days these so-called analysts, air quotes, and they're telling you need to be buying bonds, you need to be in the bonds. And I've been telling you the bond market is actually going, the yields are going to move up. So bonds at the moment aren't a very good trade. They were a good trade. They're not necessarily a good trade right now. It does look like, and I've been telling you that generally speaking, I'm expecting the back end to continue to climb up, and probably ultimately we get to the 10-year above 4%. I don't see, I think what we saw when we printed 3.25 range, we printed a 3.2 handle. That was it, finito, bottom. That was the bottom of these yields. And I think, it might be a bottom for a while, but I think all of these yields are going to continue to come up. We're still going to see inflationary pressures. Everything that's out there, nothing's going away, really. It's just going to stabilize here. And, I don't see some big move, and we're going to see 2% handle. There's so many people. So most of the time, if you watch CNBC, what you're going to see is right now, I don't know why. Listen, I have no problem with the gals in the business, but every analyst they bring up, they have somebody talking about what's being expected here, and they're talking from a mutual fund standpoint. So they're actually, it's a sales pitch. I've told you folks before, every report that you see from major institution, a mutual fund, don't care Vanguard, don't care whoever, JP Morgan, any of these guys, right? Every one of those documents. I used to work at Merrill Lynch Research, okay? Every one of those documents was nothing more than a marketing piece to get you to buy the shit they want you to buy. That's it. Everything that you see on the TV. So when you see this analyst, and we think that rates are going to be good, and you want to, going to be declining. We want you to be buying bonds right now because we believe that's going to be a good place, and that's also predicated on the theory that there's going to be a recession and somehow rates are going to go lower and all that. And my story. I'm not going to go too deep on this rant, but that's not what's going to happen. It's not higher for longer. It's just higher, and it's going to stabilize. And I think the right word for the bond market is normalize. All of these yields are going to normalize, and they're going to be driven by demand, supply and demand, and there's lots of supply. Okay, so you're going to have to pay up to the government, the banks. Everybody's going to have to give up a little bit to keep getting the money. They're going to have to keep raising these rates, and at least the bond market's going to get discounted, I think, even further as we go forward. All right, I'm done with that. All right, let's go ahead to crude oil. So interesting pattern here on the crude. Let me expand this up so we can see this just a bit. We got new Fibonacci targets, and I've been talking about the coming back into the range around 70, 75, 76. We got Fib targets are new right here, right now. Fib target 1, you'll see them over on the far right-hand side. Over here, high target 1, 2, and 3, 79, 66, 83, 85. So really what it looks like is that the Fib target 1 is targeting a test of the 200-day moving average. It looks like we should be able to get up in that range. We're going to have resistance at the 75 handle. I've been talking about 75.50, 75.80 is going to be that, and we should see this upward slope on PPM1 should drive us. We need to get closes just above around 72. Let's just round it and call it. We get closes over 73, then we're going to move up toward that 75 handle, then ultimately start to move up towards a 70, 79, 82 range. It looks to me that that's definitely going to be the configuration that's going to unfold here. And and you can see the algos even being projected on PPM2 at least, turning up over the next several days, probably putting us early in the week, something like that, where we're going to start to be able to challenge a 75 handle, 75.50, somewhere between 35 and 75, 35, 75, 55 is going to be the point where there'll be some resistance. I don't think you get a big rejection. I think you consolidate just under there and ultimately head up to these upper numbers, and more than likely it's a test of this downward slope in the PPM 2. Or PPM 200. I just fixed this scaling on the bottom here. It is still trying to turn up. So what's happening when you get too far below this, you can see. Let me draw, and I haven't used my drawing pen tonight, so I got to do that before we end. But what we want to look at here is, you see when the markets right here hang on a second here. When the markets got down here at this extreme, away from the 200, it immediately moved back up to this downward slope 200. And so what we're seeing here is now we're back at almost at extreme again, and it's going to want to work back up toward this 200. And if this the 200, I'll just draw some little dotted lines here. If the 200 can start to start to move higher. In fact, if it just flattens out, it's not going to turn up like that. But if it flattens out and the market can get back above there, then we can get to these upward targets up here on these dots up here, which would put us up there at 83, 85. But there'll be a fair amount of work. We're looking at those patterns need to stay in place. So we need to stay above this low in this pattern here. As long as we stay above that and continue to consolidate or move higher up towards this 40-period moving average, we should ultimately see the 200 on this market. All right, we'll cover gold next. What have I been telling you? Gold's coming down. We've already printed. I think FF was saying that Kitco said what I'm saying can happen. It just happened. And we're seeing this decline here all the way down to, I've been talking about 1965. Well, here we are printing 62 last, a low at 56 in this pattern now. And you can see this whole trend has been rolling over. I've been talking about this for about 5-6 days, that this was being projected down, and this is continuing. And once again, my buddy Peter got really bullish up here. This was the big breakout point. This was the moment. Every time he does that, man, that's the only signal you really need, is the Peter Schiff buy signal, which you fade it. And that is that's just best trade in the world. I should watch his channel just to get the most accurate signals to fade. But this pattern here is still got a lot of work. These moving averages. Now we've got serious downtrend here, minus 0.30 on PPM1. That's trend mode down. PPM2 has not gotten there yet, but it is showing. If you look at the algos over here, where my cursor is, that is where it's showing more acceleration, and PPM3 is accelerating as well. So hang on. Let's take a look at the weekly, and this was even more negative. And with this projected crossover here on the SMA crossover, this is deadly here, because we're about all you can hope is we hold around the 1930 level. We'll see what kind of update we get on the grid on Sunday, but you can see the algos, they're a disaster. This just looks like, another top up here just above 2000. So we've been rejected multiple times off of these levels, and now it's just getting uglier and uglier, at least from an algo viewpoint. But if you look at that white dotted line there, that is the 10-period moving average SMA projection based on that PPM down below. You can see it's super accelerating down. So there's not a lot to be positive about there. So, just if Peter's telling you buy the dip, there's more to it. So very, very interesting. All right, Bitcoin next. We'll stick with the weekly to start. I've been comparing gold and Bitcoin very, very much together here. Look at this. I'm blowing this up just so we can see this most recent action here. You can see the rollover is being projected just like gold. Crossover. This is several weeks out. The only thing that's going to hold this thing at the moment is this 200-week moving average, simple SMA 26,200. We're rounding up. If we take out that number, then you've got some pretty serious downside numbers there, because that and we've traded down to 26,374. So we're setting on the edge. The other thing here, though, is just below that there is one more support, 24.7. That number is rising. Just trying to get a number for you. About 500 per. So that's going to be 25.2, 25.1 down in that level will be your support level from that standpoint. So just expect to see that kind of move along that line until we see more of the pattern get bled off. I'm showing you. I'm blowing up the PPM2 here where my cursor is. what we're seeing there is that the algos are starting to suggest a rollover on PPM2, which ultimately tells you the potential is going to be really for a 22, 23, 22.5 print on the downside. So this may, like I said, may be just exactly what's going on there with like with gold. You know, we had a nice rally. We had the Jim Cramer rally from 15,000 up to 30,000, and now we're retracing that. But this is going to take a while, I think, both on the precious metals, and these charts are so similar. It's almost like, you know, this is digital gold. I know a lot of folks have called it that, but it looks like, and this actually ties together everything that I've said tonight, folks. Let me go ahead and get to the end final screen here. Yeah, so this is sort of the end of everything. Is if gold and Bitcoin, and we're going to get this contra rally, that means the equity markets are probably going to get more traction. There's going to be more positive tone. Doesn't mean we're not going to zigzag on all the markets, but it looks to me that the scenario that is getting painted, once I go through one of these live streams here, all of a sudden the picture gets clearer, and the clearer picture is that is uptrend. We've got downtrends in gold and Bitcoin, and we've got uptrends in equity markets, and being led by the NASDAQ in a big way. And that's a very, very powerful trend that's in NASDAQ. It very robust, and on a weekly basis, it's very unlikely that you're going to see anything change from there. So, all right, folks. Oh yeah, let's. I'm going to go back to another chart. Thank you for Chi-Town Tony. Thank you for bringing up EEM. I want to take a look at that. Okay, let's go over there real quick. Let's do that. So this is weekly EEM. Let me get on the screen here. This is weekly EEM. So I thought we were done, but I did say I wanted to cover this. So we're seeing right now PPM1 is a plus 0.28. So we've got a pretty good trend. Let's blow this up just so we can see this pattern here. And we're seeing we need to get back above this 10-period moving average, 38.98. Where are we at here? 38.95. So we're right on it. But it looks to me that we're trying to turn up here. And this larger pattern, look at the fib targets above here. We actually have a target right now. Let me bring this over on the far left-hand side, 45.95, 49.40, and 51.53. I am going to go a little rogue here, and I'm going to bring up EEM and Wavetech because I want to see what's going on there. We have a long trade on EEM. I'll bring this up really quick. So this is probably a pretty good pattern here. Let me blow this up a little bit so you can see it. But this pattern here looks like easily get us up into these fib targets 45, 50, and this thing is bottoming. This is what a bottom looks like. And so if I go back over to here and look at this is the chart with the PPMs and stuff on here, but it does look to me that we've got some potential to get up at over this level. Looks like we're just a week away from the 200 turning up, the 40 turning up. This, this is the other scenario, and I'll come back up now, but I wanted to cover that. Yeah, so that scenario, I think that the emerging markets are probably going to do a lot better than a lot of folks think. And those of you, if you happen to be watching and you flash back to 2009, and especially in early 2010, there was a lot of folks that were wondering. We had a long trade on EEM after the GFC that kept hanging on, and it continued to extend. Everybody was like, why aren't we getting a sell signal? We got to sell in SPY and MDY. We got other sales. The EM trade stayed on for a while, and it ended up to be one of the best trades in that period of time, going back to 08 and 09. So so I thought I was done, but we'll talk about this in a minute. Few people will see it. They probably won't get to the end of this video, but if you're there, there's a couple hundred of you that are here, then you're going to see probably this whole scenario that's being played out, that higher interest rates are going to damage the EM guys, and there will. That doesn't mean all emerging markets are going to do well, but that index looks very, very positive. I like that configuration there. So look for some of the some increases in the EM market going forward. So should be interesting. Thanks, Tony, for reminding me about that. All right, folks, I think that's going to do it. FF's right. Hit the like button. Yeah, so this is typical. Is like James Kim. I appreciate your comment there. They're going to keep pushing until the market gets up. I'm going to say you don't get it. This market's going up for a while, and it's not because anyone's pushing. It's not the next Fed meeting. It's nothing. That's not it. This is, you're going to be able to look into Q3 and maybe beyond. And I know I looked. Joe Biden's still president. I get it. I mean, that guy can screw up, anything. I think, I won't quote Obama exactly, but it basically said that Joe could F up just about anything, and he can. But the good news is Joe's not actually running the country. So we know that someone else is, because Joe doesn't even know exactly where he is right now. So the point is, there's still a lot of positives going on in these markets and the flows, and I think these mega caps are going to keep carrying them on. I know I was supposed to be done, and I'm still going. I'm still talking, but the point is that these markets are just going to continue to extend beyond whatever, but until they really get to some point where they've washed out all of the negative folks, and you turn on CNBC and they start telling you how the market looks like it's going to go up into year end or something like that, then the party's over. Then it's getting a little frothy. But there's a ways to go, and I think that these trends that are, especially like in EM and some of these other areas, these trends are just beginning. They're not ending. And that's where I think a lot of folks are making a mistake. And like I said, maybe Sunday night I'll bring up some other charts and stuff that do that. So, yeah, Ronald Ford, I agree with you. Anyway, all right. Yeah, DeSantis is not a good choice. I'm sorry, I'm not going to get political here. DeSantis is a shill. I'm not sure who needs to be, but yeah, yeah. Anyway, I'm just going to leave that politics alone, folks. Have a great weekend. You see me on Sunday Night Live. It's a really good thing. We'll see how my weekend goes. I wish everybody a good day trading, and we'll see you Sunday night. Cross my fingers. See you then. All right, have a great weekend, everyone.